Okay, we're back live again. Let's see if that works. Let's try this one more time. Let's see, analytics and stream health. Tell me what's up. Beautiful. Okay, I think we got it. Everyone, come back. The stream is okay now. I promise.
Yeah, it looks good. I don't see any issue with it right now. Sounds better. Appreciate it, Orchid.
Okay,
Soul Plan, appreciate it. Yeah, it looks
there we
like
go.
we're good to go, TD.
Okay, fantastic. All right, so I got I have some I got some charts up here for everybody. We're gonna watch all of the market volatility while things basically while the market lights itself on fire. Okay.
And GameStop races towards a new intraday high.
Yeah, it looks like the SPY and IWM are catching a bid too.
Mm-hmm.
BBIG's doing a thing.
Oh my God, he said her name.
Stop it.
Okay. So I'm seeing a couple of things here. Redbox, we need to see some strength come back into it because it was. I was discussing this a little bit before we ran into those technical issues, but Redbox formed this wedge pattern after this run, and now it has broken down below this support here. So unless this is a big green engulfing candle, like fake out breakdown style, then this isn't a good sign. So we need to see some strength come back into this thing. On the 15-minute time frame, it doesn't look as bad, but I'm watching this on the 5-minute just to see what the trend looks like. Seems like they're fighting hard to keep it below 13 again. Okay. So thanks for coming back, guys. Very sorry about the stream issues. I think we're okay now. All right. So like I was saying, I do want people to be careful of Redbox because it's a good setup, but it's starting to show weakness here. So you need to see this get back into this channel and keep moving up. If we don't see consolidation, that's not the best sign. What this is actually looking like it's doing is a triangle with a flat bottom. Definitely want to see this thing bounce from here now. Okay. AERC is looking nice and strong. This one bounced pretty strongly off of the 50-period moving average on the 15-minute time frame with a nice big green engulfing candle right here on my mouse. For those of you that missed it, if you wanted to check out some of these indicators that I'm using on my charts, I'm using the TMA, what is this indicator called? This is the Phoenix 1.0. This is actually this was an indicator that was coded for a guy by the name of Artie from the Moving Average. I turned into a fan of his channel because he's a day trader on the forex markets, and I've been enjoying learning some of his technical analysis. All right, on the other side of things with the broader market, we've got the SPY basically got struck by a lightning bolt from Zeus and just absolutely puked all over itself. We hit support here at 390, and it looks like it's starting to fight for air. But as you can see from these moving averages, we got the 200, the 50, and the 20 on a 5-minute time frame. And if we go out to the 30-minute, we can see that we have this big death cross here on the 30-minute time frame that just happened. So this is more than likely a dead cat bounce situation. The market overall is way overvalued, and the news from CPI, even though there may be like an initial really strong reaction, over the long term, going forward over the next 60 to 90 days, I'm expecting the market to absolutely bleed to death. Whatever stories keep going out, or at least they were going out probably until today, is that, oh, now's the time to get into the markets, and this is the best time to invest in indexes. And I'm like, you're so full of shit. So I wanted to warn people a little bit more since I have the time. So if you have any questions about some of the circumstances surrounding the latest market, well, sickliness, feel free to bring it up. Okay, someone, let's catch up with chat here. Yes, Napoli, I am having a good day. Thank you for asking. GMDV. Sure, we can take a look at that one. Let's see. I do want to do a little bit of TA on AMC because I'm sure people are going to ask. So let's do that really quickly. As a matter of fact, I'm going to try out this new highlights video situation. So we'll cover all of our main plays here for the day, and throw up a highlight video for the channel. Oh, I see. I can pick the time frame. That's kind of cool. I'm trying to figure out all the new YouTube features. Okay, so I guess I'll just play it like I'm doing a regular video recording. Hello everybody, this is True Demon, and I just wanted to do a little bit of quick TA on some of the main plays that we're looking at the moment. Currently, everything is sort of hinging on the overall market behavior. At the moment, we're kind of watching the market set itself on fire. The market has retraced from the previous morning down by 5%, which is a really significant move, down from a price of roughly 413. And if you recall correctly, or if you recall from a few weeks ago, I was talking about how the SPY was hitting resistance repeatedly off of this 415, 416 level, and it just couldn't break through. And I took that as a sign that there was institutional resistance here from institutions that were trying to get rid of all of their heavy bags, because they know that the market is not doing well. They know the CPI numbers, or they knew that the CPI numbers were going to be terrible, and they knew that credit card debt was going to be off the chain. So as a result, I took a big short bet on SPXS, which is basically a 3 times leveraged bearish bet against the SPY. So if you buy calls in SPXS, that gives you exposure to the SPY to the downside. And while the SPY is going down, SPXS goes up. So I took that bet, and obviously that is doing very, very well. The how this affects the rest of our plays is that AMC is currently down at the moment, but what I suspect is going on is the overall market. It acts as a sort of collateral for the for short positions. If you recall, shorts need to borrow cash against their brokers in order to take their short positions. So because of that, they need to have margin equity. How do you get margin equity? Well, either you have to have cash collateral or you have to have some long positions elsewhere in the market. So if your long positions start to go against you and your like classic blue chip investments are not doing well and you have large short positions, then that drains away your margin. So part of what my suspicions had been is that if the market continuously dumped lower and lower and lower, that we would see meme stocks and heavily shorted stocks begin to show strength. So I'm also looking at Redbox, which I'm so happy with this huge move that it made. The only thing that I am kind of disappointed by is that now I see that Redbox is starting to show more and more weakness, and it's now breaking down on this triangle with a big red candle. So it's I would caution people not to stay in this for too long because it already had a huge move. So if you're swinging calls, then it's probably a good idea to get out of those calls or at least take some off the table and leave a runner or something like that. Never over leverage yourself on calls and then hold on to it through a big volatile move because you expose yourself to a lot more risk when you do that. So this could be a fake out breakdown, but just know that this is a bearish setup at this point, and the RSI is heading down lower and lower. So there's some pretty strong selling strength at this point. It could come back, but I just want to make sure that people aren't like holding on and missing out on their window to take profit. And then we have AERC, which is Aero Clean Technologies. This one is another squeeze play that we've been paying attention to pretty closely. I'm not exactly sure what the main catalyst for this one was. This was actually brought by one of our mod staff, Chef Pew Pew. So thanks, Chef, for bringing this one to everyone's attention.
Yep, the news catalyst that dropped, if I may interrupt, was just simply they make air filtration systems and they filtrate viruses and such for hospitals, and they got FDA approval the other day.
Oh,
And
I
that's
see.
why it went bonkers.
Gotcha. All right. Well, that
And
makes
it's
sense.
very shorted, heavily shorted.
Beautiful. See, I love that. You got a company that's actually trying to do something that's beneficial for the world, and shorts bet against them for whatever reason, and the shorts get burned. It's a beautiful thing. Okay, so I'm going to have to drop here to go and have a meeting with my boss, but I'm going to leave the stream up and give everybody a chance to go ahead and chat with the analyst staff if you'd like. I have to take a call. Unfortunately, it kind of got dropped on me at the last minute. I know, terrible timing. But I will come back in just a few minutes and we will close out the stream straight through to Power Hour.
Yes, sir. We will keep your chair warm for you, sir.
Hey, Rupp, Eric just pushed through the 23.6.
Yeah, Eric's at 11:30.
Yeah, for anybody wondering, Eric is what the verbiage is that they're using for Aero Clean. Just quicker to say than AERC.
Oh, it wants to break.
Rupp
Oh,
pushed through the 23.6. Is that what you're seeing, Rupp?
Time for a doobie. Let's go 1150.
And pew pew.
Don't do drugs, kids. Drugs are bad. Okay. Cannabis isn't a drug though, so don't worry.
No, I was about to say,
Kool-Aid
don't make me
is
pull out.
A-OK.
I got a medical card for that.
It's my prescription.
Don't be like Bob Saget. Don't make me do like Bob Saget and Half Baked.
What, fall down? That's too soon.
Where he says marijuana is not a drug.
Oh hell, there's nothing in the way on the level 2.
Ooh, Eric is moving. 1170. Volatility is picking up. And for those who are thinking about getting a position, just to let you know, some people have been in here. What was it, Pew Pew? What was the buy?
$2.
Yeah, $2. So it's kind of ran since then.
Yeah, and it is a microfold, and it has ran a few 100% over the past few days. So, yeah, it's dangerous.
Trade with caution.
I have it tapping the 23.6 bid.
And gold is still pumping, Jack. BRQS. Yeah, we had some people on Borks. Wasn't Borks up like 20-some% pre-market?
Yes, sir.
I think we have some people in Discord playing Borks. Borks we use BRQS.
Is the
Yeah,
president, has he even started yet?
Well, I'm going to imagine that he will not be on time. That's where
I wonder what makes you say that. Casual Fool says he's talking now.
if he's talking now, somebody is gonna have to bust out with the meme. The president meme from what's his name? My favorite comedian, Dave Chappelle. I believe I have a little brain fire right there. What are you gonna do, Eric? That EDU still trying to move, or not EDU, the redo, the one that came up on the Hotbot. It was down like 68% or something. Now it's only down 48%.
Yeah, I tried to get a fill. I didn't get it.
Oh yeah.
Oh yeah. Hell no.
No.
Oh yeah. So are these Redbox puts gonna start trying to print on me? Need to get out of these today. My lighter. Yeah, I said Redbox puts.
I was watching
Guys,
the redo.
look at GMVD. What is GMVD? I'll take a look at it.
I was looking for a breakdown on redo after the halt. I didn't get it.
Am I looking at this right? GMVD? GMed Innovations. Damn, it's Amber hurting. Are you trying to get in this or what? It looks weak, bro. You trying to get puts on this, Jason? I want to make sure we're looking at the same one. GMed Innovations. GMVD. Yeah. It's looking pretty weak, sir. The daily looks like it took a big Amber herd.
Yeah, that's what I'm looking at. It's, you know, still trying to find a bottom. It's stuck in that downward channel.
Yeah, I don't think it's found its bottom yet, G. But if it does find its bottom soon, what was the bottom on this? 11 cents? Ooh. 11 cents was the bottom. Yeah, it's amber hurting right now, G. Even on the weekly, it looks weak. No pun.
Might get a nice push here on Eric, but for day traders getting out.
Yeah, GMVD looks weak, G. Very, very risky, in my opinion. Super heavily shorted. Well, let me talk to my ScourgeBot, see what he says. ScourgeBot, is GMVD shorted? Let's see.
ScourgeBot, come hither.
ScourgeBot, you have been summoned, sir. I'm gonna do a live stream chat so everybody can see. Short squeeze GMVD. GMVD has no options.
How'd you get that shit to pop up so quick?
Let's just do it in split. I don't know, man. I wouldn't play this one.
Mr. Bergonk, that was not.
Hoop money is pumping GMVD. Oh, it's a pump. Yeah, I wouldn't play this one, G. Just looking at it, looks weak as hell on the daily. If you want to pick up some shares, you pick up maybe a little bit and then check it out later on.
Puts on Rev.
And look at Redo. It's still trying to move, G.
Puts on REB.
Ooh, is Eric trying to pump? I need to get out these Redbox puts, man, ASAP. Even though I got to burn a day trade. Eric looks like he wants to break, though, bro. Puts on my puts. Yeah, I was thinking the same thing, Rizzler. They don't look good. Just downward momentum, just a falling knife. Pretty sure puts will be super expensive to even try to play it.
Eric keeps tapping that 23.6 retracement.
Tap, 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 tap. What's the intraday high on Eric? Let's see.
$11.70. We just had it a little bit ago.
It looks like we might be approaching that. If we can get some pressure right here. Pressure, bust pipes.
There's nothing in the way on the level 2. All we need is buying.
Oh, look at Redo. REDU. It was down 68%. Now it's only down 38%. Wow. I'm gonna have to start looking at these hot bots more, bro. I can do some quick day trades with those.
It's hard to pick which way you're going to go off of that halt, though. Like you and I have both seen the plays that get halted and it on the way up and it just drops out.
Yeah.
Yeah, that's what I did. Logical. I tried to get a fill at 250 after the halt, but it went the other way.
Yeah, like paying attention to them, like they're good to know what's going on, but those things, I mean, those things can get violent.
Fucking hell, these stupid contractors. I got pulled outside. Pulled outside. I had an order in place. I was trying to buy shares and calls and redo. Only 7 of them went through out of the 80 I was trying to get. At least those 7 are up 300%. Fuck.
Wow.
Still alive.
That was not.
And by the way,
don't sleep on GME. GME looks like it wants to pop. Let's go, Jimmy. Show me what you got for Pocha. Man, got in redo at 306.
That just cost me $2,000.
Just an FYI for everybody, you are still live on YouTube.
Thank you. Man.
Can add some.
Well, hey, at least I got some fills.
Oh, I like that. I like that, Flabbergant. Yes, sir. Yes, sir. Can add some basic TA when the alert comes through. Have the bot do it for you, bro. Yes. Hell's trading floor. Got some computer wizards, bro. Jimmy, what are you doing?
Eric dropped through the 23.6, hanging just above the 38.2.
Yeah, they're trying to break it down, bro. I like that candle, though. The size of that wick. RSI and MACD, yes, sir.
Okay, Redbox just broke out of a downward channel and it is currently at resistance.
No.
At 1295. If it can break that, it might be going north again. If not, it might pop. Oh, cool. If it consolidates, pops down, and hits the channel again, it'll create a reverse head and shoulders. Or I can just go here. That's fine.
Yeah, I'm happy with it just going ahead and heading back up from here. This is a good spot.
Yeah, why not? You know.
Wait. Am I the only one who got puts?
Yeah.
I love it when the price goes up and you're like, oh, let me check my call options. And they went down 10%. Oh, that's fun.
Or are you going to look to see how your call options are doing and then you realize you bought puts?
Oh, that was fun. Yeah. Yeah, that was fun.
Where you sell all of your call options thinking you're adding to them and you don't, and you miss out on 100% run. That's fun.
Oh, zebra.
I was just trying to buy some call options now, and yeah, I got 7 though. I got my 7.
Or when you're up 2,000% and are too busy taking a screenshot to get the order filled.
I knew that was coming.
I did buy $5 calls on that same play that are currently up 11%.
I did save 30% on my insurance by switching to Geico.
Congratulations.
And?
Well, I wasn't going to do the fuck you because we're on YouTube, but I'm pretty sure that's already been killed.
He killed it earlier.
Does anybody know what the president said? Anything crazy or nuts or?
I hope he says something about stimulus checks, because then the algorithms will pick it up, and then maybe we'll have some kind of money come in.
Mina
God knows we don't
Bird,
need no more stimulus though.
the Mina Bird in YouTube wants to know if Redbox is gonna go under 4 before the big pump. Redbox was only a couple of dollars a month ago. This kind of is a pretty big pump.
Yeah, that's for sure.
Yeah, it's really tempting to look at dollars and cents, but you really need to acclimate the brain to kind of hone it in on its percentages as opposed to those. Because, man, you can make a whole lot more money by something moving from $1 to $1.20 than you can from something moving from $200 to $220.
So let's check Redbox. Let's see. On the day, it's up 35%. On the week, 103%. On the month, 205%. On the 3 month, 578%.
That's about
I
right.
would say that's a
I
big
would
move.
say that's a little chasey.
Okay, Redbox just did that thing where it tapped the top of the descending channel. Let's see if it bases here.
From the lows back at the end of February at $1.56, the high today put it at 850%.
We have a reverse head and shoulders on GameStop. If you look on the 3 minute.
Jimmy boy.
30.
I have it on good word that the president said buy Redbox on his way away from the podium.
He's
It was a fart, but that is what it said.
He was walking away with a piece of toilet paper trailing behind his foot that said "not financial advice."
And gold is still pumping. What are you doing?
And for anybody listening, it didn't matter who the president was. We're making that joke.
Very true.
100%.
However, Joe definitely fits the aloof bill pretty well from time to time.
They all do. They all do.
I mean, shoot, man.
Well, Amy's getting some volume. Oh, the spy's trying to come back? Yeah, the spy's trying to bounce. That's what it is.
Oh, look at that. Redbox toying with hinting at a reverse head and shoulders itself.
Yeah, definitely the spy's trying to bounce.
Spy bounces, which means the margin calls aren't as hard.
It's trying. I just don't think it has it in them.
UIRN caught itself off the fib again.
Revlon halted. Like the makeup company?
You didn't hear about their new eyeshadow that just got released?
Jeez.
Does
it cover the black eyes I get from the market?
If you were in calls, it did.
Redbox is getting a little spicy.
Oh, yikes. Revlon took a nosedive. What happened there? It's open again, but man. Oof. All right, we're seeing the tiniest of tiniests of green across the indices. Oh, Redbox. No, please stop. Don't keep going up. Okay, fine.
Push the button, J Ruff. Push the button. Let's go.
They've got 50K stacked on the 1310 on the ask, which I'm sure will suddenly disappear here in a second. When they realize that's not going to stop it, we'd better pull that and move it further down.
Just kind of intently watching that 50K, going, come on, disappear, disappear.
The SPY trying to reach 392.80. Does it can have a little breakout.
I'm
1286.
sitting on the button. I've got it right here. I'm keeping you on suspense.
Revlon preparing to file Chapter 11 as soon as next week. What?
Whoa. Actually, bankruptcy can be a really positive, after all of it washes out, might be something to keep an eye on. Because that just eliminates debt.
Hell yeah.
They tend to have a lot of bounce rebounds after a bankruptcy.
Oh, Eric's coming back around.
All right, here's the button. Let's see if it does anything.
Macaron after party. Speaking of which, why do stocks like Mullen Barcode the way it's been? Well, I mean, there's just no volume, bro. I mean, nobody's trading it. That's why it does that.
What you're seeing right there is you're seeing market makers creating liquidity by just pushing shares back and forth, 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 back and forth. And that's part of what allows liquidity to happen. It gets your fill. It's a mechanic of the market's functioning. So that's not a bad thing. But what that does indicate is that, like, there aren't people trading the stock. It's being pushed around 100% by algos. So when you start to see those real moves out and you don't see that barcoding, that's when you're seeing some real price action. But it's a really good test with like BitNile, Mullen, some of these lower float stocks with low price points. Go to the 1 minute chart. Because sometimes if you're on the 3 or the 5 minute, it still might not quite look like it's barcoding. But if you go to the 1 minute, sometimes you will see that it is just fluctuating just by a fraction of a cent, up and down, up and down, up and down, up and down. And it will look like you're trading, instead of lines, it'll look like you're trading Legos instead of crayons.
Man, I thought, I'll go grab me some Revlon puts for the end of the week.
Did you see the Scourge bot? What it put up?
It's like that shit done went off the cliff.
The Scourge bot said there's 75% cause and 25%.
Yeah, that's the bankruptcy play. They're banking on the bounce now.
Yeah, but they're banking on the bounce for next Friday. It won't happen that soon.
I don't know, man. I mean,
They're probably not banking on that price point. Really. I think that they're playing the volatility because they just bought those while the volatility is at an all-time low. So if it turns around and goes north at all, it's kind of like when you buy when the volatility is super high on a call contract and it's running, and then it goes down like a fraction of a cent and you lose half your value. This is the inverse of that. So they could be purchasing all these like out of the money, like heavy call options. Wow, the volatility is stupid low. And then as soon as it makes its move, they can offload them, create bag holders to everybody else who buys them, and make a crap ton of profit because they're playing the IV.
Hey guys, I'm back. Thank you to the analysts and the mods for covering my absence.
Yes, sir.
I see that RDBX is bounced, and it looks like it's still staying within the triangle. We'll see how it does. I'm really having a hard time judging whether it's more like bull flag or more like symmetrical, asymmetrical triangle. Guess it could be both.
It's got this downward descending channel that it's been. You can draw the channel from right around 11 o'clock? No, 1 o'clock. Dang it. Yeah, right around 1 o'clock. Nice little descending channel popped out of it. Why do I have 12.95 marked? What is that?
Well, I'm uncertain, but we'll see how it does. We'll keep an eye on it. It looks like AERC is still running. I want to cover a couple of other plays, and I know that a few people are asking about a few picks. So let me go ahead and catch up with chat. GMVD. We'll go ahead and look at that one for everybody. I do want to warn people that I'm expecting that while the market is currently way down, there is probably going to be a fake out rally at some point. It may occur later on in the following weeks, but right now the market is in downturn mode. So even if it does bounce, I don't expect it to bounce much. There's extremely negative sentiment in the market. So if you see a giant move to the upside, don't trust that. Don't believe that that is a bounce. Be very careful of those narratives trying to push people back into going long in a market in an environment that is extremely unfriendly. All right, so G Medical Innovations Holdings. I see they authorize a $1 million stock buyback. Private placement of investors. Interesting. Okay. So they got a few cool things going for them. So I can appreciate that. Let me go and see if I can pull up my Ortex data and my unusual whales and go and look at some of the flow and the short interest. A few folks were saying that the failures to deliver on GMVD were extremely high.
If you scroll up on the live stream chat, you can see it. We have ran the skirt spot on it.
Gotcha. I see Revlon got looked at too. Wow, 15% of the float on $7.50 strike. That's pretty interesting. You said that you ran it in live stream chat? Okay, I see it.
Yes, sir.
I'm getting logged into all of my terminals. Had to reset everything. Oh, wow. Okay, yeah, that's interesting. So G Medical Innovations. It threw a short squeeze signal back in the beginning of March. So that would have been back in this. I see that it was a big pop here.
The daily looked horrible.
Yeah, I agree. The daily on this one looks really rough. Failures to deliver.
Bottom was like what, 11 cents, I think, on this one. Can't remember.
I don't see the failures to deliver that people are talking about. I see the short exempts were really high relative to recent trading, but I'm not seeing excessive failures to deliver. I'm not seeing any failures to deliver, so I'm not sure what that person is talking about. The Mina Bird. I don't know if Redbox will return to under $4 and come back up again. I don't think that it would come back up again after a move to the downside like that. There's there's good reason why Redbox moved to the downside, and it was because of a really shit offering and an exchange for shares offered by Chicken Soup for the Soul, who is moving to acquire Redbox Entertainment. So they were basically offering like one share for every like one share's value for every 18 shares of Chicken Soup for the Soul in terms of its equity. It would have basically cut Redbox's value down to less than 80 cents. And it was a joke compared to what it was trading at. And it's because they hold a 60% majority in outstanding stock. So they basically have enough shares to acquire the company and take over ownership for it. It is a hostile takeover. But what the what the issue is, or what the issue seems to me, is that they need to close the deal and get through the actual legal paperwork. And in the meanwhile, retail is kind of running away with the stock right now and pushing its value up. But it's not going to last. Like, it's not going to stay that way. No matter what happens, no matter how high Redbox goes, the conversion rate is the conversion rate, and Chicken Soup for the Soul is going to reverse merge, or they will just simply absorb Redbox Entertainment. The terms of it may change, and what those terms dictate will determine the value of Redbox at the time that it closes out of the stock market. But no matter what, Chicken Soup for the Soul is acquiring Redbox, and they have the shares to do it. So they kind of make the rules at this point. They can fuck people over, and that's why I want everyone to be very careful that even though this price is pumping to ridiculous levels, that's extremely cool. And yes, shorts are absolutely getting their asses smashed in terms of like the cost of borrow fees that they're paying, but it's not going to stay that way forever. So like don't just throw money at it that you can't afford to lose, and please be hedging your bets. Hedge your bets, because this same situation happened with SPRT, where SPRT had a massive gamma squeeze. It went from $10 all the way to $53, and then Greenidge Holdings absorbed them with a reverse merger, and their stock plummeted instantly. They reverse merged it with a really shady filing, and I eventually found, looking back retroactively, that the stock's value was being exchanged for a terrible rate, and it resulted in a massive loss of equity for SPRT shareholders. So that same situation is playing out again here, and why I want everybody to understand that is because even though I was right about SPRT, and even though everyone who pointed it out to me was right about the squeeze, we were ultimately wrong that those values were going to stay at those levels, and that it would result in Greenidge Holdings having a much higher share price. And if that happens again with Redbox, then the only thing that can possibly come out of it is the value of the stock just basically goes down to less than $1 again. So that will eventually happen. We don't know when it will eventually happen, but we do know that is with certainty that Redbox won't stay at these prices, that it's going to eventually come back down. Now, how high it goes from now until then is kind of up for debate. It's looking really impressive so far, and I'm loving the price action on it. It looks like it's getting ready to go on another run if it can break out of this channel. But Yeah, it sometime between now and the next month, I'm estimating, like between now and 30 days from now, the paperwork will be out and suddenly there will be red candles on Redbox. So this is a race against time between retail investors who are basically absolutely hammering shorts and retail and the shorts liquidity and their margin. So if shorts lose out on all of their margin, then they can get squeezed out of their positions hard, and Redbox can go to new highs like you wouldn't frickin' believe. But if the shorts beat us to the clock, if they run out the clock on us and the filings from Chicken Soup for the Soul come out, then Redbox can just totally wash out all of our positions and reset them back sub $1 if those same conversion rates stay in place. So that's just a full situation, being totally transparent with everybody. So just, please be careful, right? Just be careful. One way that you could play this is you could bank on a merger occurring, and you could do something like you could sell covered calls if you have stock in Redbox. Selling in the money covered calls and buying at the money puts for very distant expirations, like 3-6 months from now, and you make money on the calls by letting the theta eat away at the value of them. And if Redbox goes down, then you just exercise the puts and you close your Redbox position. That is called a collar strategy. If you want to look up more about the collar strategy, there's a video on my channel in the tutorials playlist. You can check that out. It's called the collar strategy, and that's basically how you safely exit a squeeze with a guaranteed profit no matter what. You have worst case scenario, you make a profit in the event that you are setting that strategy up in the middle of a squeeze. Okay, Redbox is back above the VWAP. Yes, I do see that. Let me actually get VWAP up here. I like having VWAP. Looks like SPY is actually getting rejected by its VWAP right now. Wick City, my dudes. Yeah, you see these tall wicks on the SPY? These wicks are telling you that the SPY is about to get rejected. So look for SPY to go back down to 389 before market close today. SPY is not having it. Okay, so GMVD, that is done. I'm sad to say I don't really see the failures to deliver that you're talking about. If you want to bring that to us and let us know where you got those figures from, if you can prove it, feel free to bring it into the Discord. This does not look like a good stock. I would not touch this thing. It just, I don't see the case for it. Maybe if these moving averages turn around and you start to get some crosses, but like right now, nope. Nope, nope, nope. Don't want it. Let's go take a look at Mullen. So Mullen is barcoding again. Far below its moving averages. It's so disappointing, man. It's oversold on the RSI, but that doesn't mean much with how this momentum is going. The only thing that you have here is the fact that there's a descending triangle on this one. falling wedges tend to be bullish, and it does seem like it's finding a bottom here. But I don't know what that's going to look like, if it's going to make it back before its previous highs from last week. I guess we'll find out. But that's okay. I know people are holding Mullen for the long term. EV does seem like a strong field, but we are going into a market crash in a high inflation environment, so it's hard to say. I would be a little bit worried about that just because inflation makes everything so expensive. So it's going to make it harder to get sales out the door for anybody trying to sell cars, much less EVs, which are going to be expensive. Why do stocks like Mullen barcode the way it's been? That's an excellent question. So barcoding, I'll first explain what barcoding is. Barcoding is a situation where on a smaller time frame, you see a stock doing something like this. So if you see a stock that is like wicking up and down and creating these, thick and thin bars, we call this barcoding. And it's basically just a sign that there's very little human activity and that the stock is trading back and forth on the spread between the bid and the ask rapidly. So this is what algorithms do. And basically it's just, like I said, it's a sign that there's no human activity, there's no human buying volume happening here. So this can be, it's typically seen as a bad thing just because it generally points to no sentiment one way or the other, so algorithms have full control of it. If something fundamentally changes, however, in the way that the stock is trading, then it can turn around. What I do see here that's bullish for Mullen is that it is trading in the gap right now between its previous lows at $1 and this gap fill here at 117. If it finds strength and support here, then that can actually be a bullish sign. So if I were to, let me actually go to a much bigger chart because this is super, super tiny. I haven't touched this for quite a while. Okay. Conveniently, I left myself a nice volume shelf right here. So this is exactly what I'm talking about. So the volume shelf that I'm speaking of, that's this right here, these sideways volume bars. What this is doing is actually showing you the buying volume and the selling volume at specific price ranges. So in this case, you have this big bar that's between 80 cents and 90 cents, or I'm sorry, 80 cents and $1. And as you go onto smaller and smaller time frames, you can see the volume on narrower and narrower channels. But basically what you're seeing here is that a lot of Mullen's price action occurred at this level. It spent a lot of time here, and it spent a lot of time here, spent some time here, and it spent some time here. So these are areas of significant price action where you see market structure form. Like, for example, you have this falling wedge here on this teeny tiny time frame. You had this falling wedge that broke out into consolidation, and then it popped as soon as there was a bullish signal. Example of that is this this bullish divergence here on the RSI. You see the RSI made a higher low here, and a low here, but the price made a lower low on that same location. So it went to a low here, and then it wicked down here, and then pulled back up. So that's bullish divergence. And after the consolidation completed, there was a big move to the upside. So a couple of these indicators might have tipped you off that this move was coming. You wouldn't have known that it would be this strong or that it would have gapped up in after hours. But I mean, with bullish divergence, you tend to think, okay, it has some strength and it's starting to look like it might turn around. So you would go long on it. Now that Mullen is returning back to these price levels and it's hanging out here above where these prices had broken out originally, you can see that there's some really strong support here. So you would mark this out as support. We'll go ahead and mark it at 110, since that's a psychologically significant price, or so we believe. And you draw your supports and resistances this same way. So you can see that the price spent a lot of time trading in these areas. So this would be our resistance at a psychologically significant price of 135. But all that this really means is that Mullen is trading in a channel of high volume, which is historical volume, by the way. It's not actively high volume. As you can see, it spent a lot of time here during low volume periods and high volume periods, and right now we're in a low volume period. So there's several ways you can interpret this. If you were going short on Mullen, you would say that this is its last area of support before it breaks back down into these areas, and it would be going back down to like sub $1. But there's not a lot of room there, and it's been holding these prices for, well, ever since the 10th of March. It really hasn't broken down below it. It spent a little bit of time down here, but it immediately broke back up and stayed above those levels. So since this is such a heavy area of support, you might look for another instance of bullish divergence on the RSI. So if you see another instance of bullish divergence like you saw back here, or here on the chart pattern, then you would go long at the first sign of bullish divergence. And as soon as you see that lower low complete, you basically wait for a candle to close on the hourly time frame, where you have a low here and you have a lower low on the price, maybe somewhere down here at like $1.10, but you see the RSI showing strength. If you see the RSI closing up here and the price closing a little bit lower, then that's your buy signal. And you would go long on Mullen with stock or at the money calls or something like that. RDFN, sure, I'll look at that one. Redfin Corporation. Yes. So Redfin, I actually like them as a data provider, but right now they're in the wrong market, my dude. So this company is hurting bad because the overall housing market is way overbought, and everything is in downtrend right now. Like the whole housing market, I'm so bearish on the housing market right now. I can't even begin to tell you. This is a bottom for it though. So like with Redfin hitting this low point near its COVID crash areas, I actually might be tempted to go long on this. But I don't know enough about their financial situation, so that would be something to look at. They actually posted a pretty significant loss in their net income just in the last year. The past quarter was really bad. A net income of negative 90 million, which is that's pretty bad. Yeah, Redfin is posting some pretty bad numbers. I would honestly stay out of it and wait for a sign of strength. It's consolidating now, but you don't know how long it will wait there. So here is how I would do this. You see the COVID crash is where it's currently at, and it's breaking. It's threatening to break down. You have this bear flag here. You see this. You see the market move down like in this perfect channel, the way that it has, and then suddenly it starts going sideways. This is a bear flag. So if this thing continues, you might see it going down to like, I don't know, it could be going down to $5. This may not be the bottom for this thing. So rather than waiting, or rather than jumping in on this right away or going short on it, set yourself with some alerts and wait to see if it breaks this pattern. So you've got two things to watch for. One, you have resistance here at 1150. So that's a pretty significant area of resistance. Sorry. Got bumped off my chart. So if you get this structure to break in one direction or the other, set alerts on both of these price levels. I would actually set this a little bit further out, give yourself some distance, because you don't want to get caught in a fake out breakout. That's how you lose money, getting caught up by a big market maker or a broker that's just trying to mess with you.
ED, I'm really digging this halt alert thing you got set up here. This is great.
Thanks. Big thanks to Flabbergank for setting that up.
Flab, you the man.
So like I said, I'm slightly biased because I'm very bearish on the housing market, but I do see that Redfin is also very oversold. It's just anything to do with housing right now is not in a good spot. I'm basically shorting everything that has anything to do with the housing market, whether it's commercial REITs, residential REITs, if it's lumber companies, or if it's building contractors like think Lennar or DH Horton, any of those companies that are basically their entire income relies on rapid sale of homes at higher prices, that's coming to an end. The housing market is way overbought. Houses are no longer in demand, and I'm expecting housing permits for construction to just basically disappear, and I'm expecting a massive inventory dump because of all of these realtors trying to get the fuck out of their houses and empty their portfolio of real estate, because this is the last high for the housing market as far as I'm concerned.
And I don't know if it's coincidental, but around here, around my neighborhood where I'm at, I'm starting to see more houses for rent and more houses for sale. And I know it's not coincidental because I've been here for 15 years, so I see everything around here, and
Yeah.
I just don't see that. It's not normal at all.
Yeah.
It's a perfect storm. It's a perfect storm of a couple of things. You've got supply chain issues starting to relax a little bit, labor starting to relax a little bit, and a ton of homes that were halfway built, 3/4 of the way built, and had to be put on pause because they couldn't get the materials to finish, couldn't get the labor to finish. So now, all of a sudden, you're starting to see an influx of these paused projects go to completion. You have interest rates going up, so there's a scramble for certain people to get into houses as well as certain people to get out of theirs, because of course a lot of people, in order to get the house they want, they might already have one to move out of. And then you've got mortgage moratoriums being lifted, you've got rent moratoriums being lifted. It's all these things happening at once, and it's creating a supply. It inevitably in a lot of areas is going to create a supply glut, and you're going to have homes available with people unable to get the loans because interest rates are going up and everything is squeezed.
Yep, absolutely.
Simply, I mean, the pipeline for new people looking to buy houses now coming in the future is going to dry up. When you had the ability to buy it at a 3% rate for years and years now, and you increase the interest rates, the future pipeline of people coming in is starting to go away completely. There's not an influx of new people looking to get into buying a house. If you weren't already in the process of trying to get out or trying to get in, you aren't rushing to the door now to try and figure something out. You're already too late. So the new pipeline's going away.
Right.
And that's not reflected in numbers. Like, you're not going to see those in numbers. What you're seeing is housing still being sold. People are still buying houses. People are still trying to put their houses up for sale. You're still seeing that because of the existing pipeline. If things don't turn around and numbers start getting better before the new pipeline worth of numbers starts to hit, it's going to get really bad.
I got a couple of things to add in. Couple of things to add in here. So I just noticed that we have an inverse head and shoulders that just completed on Redbox, and it broke the neckline here, or it looks like it. Okay, I see. I'm kind of jumping the gun a little bit. I'm expecting a head and shoulders to complete in this area. So let's see what happens. But I'm expecting Redbox to form this head and shoulders, or inverse head and shoulders. You got shoulder, head, shoulder, and a breakout above $14. So if you see this, applause and congratulations. If it breaks down below 1250 again, then we're back down into a channel, and it looks like we'd be moving into consolidation. Too early to say if we would be heading back down, but I would at least take profit off of the calls and wait for a sign for it to go one way or the other and pick a direction.
Is the neckline at 1385 ish?
Yeah, about 1385. Like I'd say more like $14, but yeah, right in that area. There's these high liquidity pools here, high density liquidity pools that got pulled out in those areas. So I suspect that there might be some early day traders that jumped in on this inverse head and shoulders when it started to form, and they're getting washed out right now. So we'll see if it doesn't bounce here at 1250. I'd like to see it bounce above 1250. If it breaks down below 1241, then we're going into consolidation. I wanted to continue the conversation on the housing market, though, and give people some ideas for how they can take advantage of this. So like I was saying, there's some short bets that you can take against home builders and construction companies like D.H. Horton and Lennar. I think there's a couple of other ones that are in my list. I'll share some of these. I don't want to share everything. But, God, where is this? Yeah, PHM was one of the picks that I was really looking at. Pulte Group, they're pretty overbought, and they have yet to fully break down. So I see some potential for these guys to get smashed. And what's more, they formed a head and shoulders on their daily pattern, on their daily time frame. So they're kind of tracking with the SPY, but they haven't quite fully broken down, and this is the first sign of weakness. Right at their last level of support before they start going into this area where the COVID crash occurred. So some ideas for people that want to take a short against the housing market. If you're looking at something with a bit more leverage, however, and doesn't require you to expose yourself to multiple tickers or just specific tickers, you can go with DRV. This is also a bet that I'm doing. DRV is 3 times bearish leverage shares against a real estate market, and it's basically an ETF that uses swaps and short positions against REIT companies and real estate investing organizations and trusts in order to leverage itself against the housing market. So whatever a good way to track this is to look at the XLRE. That's the SPY's real estate sector ETF, and whatever XLRE does, this does the opposite. If XLRE is going down, then this will go up approximately 3 times. So if XLRE were to take a 1% dip, this would rise 3%. And that's exactly what just happened. If you actually compare this to XLRE, then you would see this huge dip that occurred here. It dropped from, let's see, it had a back-to-back 30% drop. So DRV is currently up approximately 30% or 25.5% at the moment. So this is one way that you can leverage yourself up against the housing market. And if you're betting on the housing market to go down like me, and you see this volume coming into this has consistently been a sign that there's more to come. Big volume candles back here were also tipping me off that DRV was going to start running, and sure enough, it did. It went from $30 all the way up to a high of 50, 70, 50. See, it was 51.53 when this candle hit its high point. So we're getting ready to go on another run here, so it would seem to me. Also, inverse head and shoulders. If you were to compare this to the real estate market sector, you would see a head and shoulders on its chart. God.
We got quite a few people asking about LITM. I think that's a Cadude call out.
Yes, it is. So I actually was just about to get to that one. Let me go ahead and grab a quick highlight video of that housing market stuff that we had just talked about. I do want to capture some of that conversation. Okay. Okay, got that. Right, so LITM, this is Snow Lake Resources, which is an Australian-based company. This company I actually looked into very briefly after it was called out by Cadude, and I absolutely love the bet. Currently, there is a massive lithium shortage going on right now, and Snow Lake Resources has gotten mineral rights to several mining plots of land that are rich in lithium, and that's mainly what their focus is. There's also very lithium-rich areas in the Andes Mountains, like Chile and Argentina. So there's a few companies out in those areas which are pretty flush with resources that they can mine. And if you're wondering, like, why is there such a huge demand for lithium? It's because lithium-ion batteries require this, as well as capacitors for the semiconductor industry. So because lithium-ion technology is so huge, and it's like basically it's what enables us to have these extremely powerful electric vehicles that have high storage capacity. Lithium has the best conductivity for storing electricity while also discharging it at rapid rates. So it's a very necessary element in our modern world, which requires extremely high throughput of electricity from a battery. So lithium demand is going to go up. And we're seeing a crisis with the semiconductor industry where there's just not enough of it to go around. And even Elon Musk was trying to figure out and has been talking about this, Tesla securing its own source of lithium. So let's see if we can find, let me see if I can find, see, I wouldn't want it in futures. I just want to see like the price of lithium. I was hoping that I would be able to find like a commodities source. Can someone help me out with finding a ticker on lithium prices in TradingView? Hey, Audi fan. I I saw your chat message. It says that I'm a lot louder than the analysts. Is that a complaint that I'm too loud, or that they're just not loud enough?
Would LTH be? Are you able to see LTH?
Um, LTH. I'll see if I can get
It's
that
like
one.
a lithium future, I think.
I'll see if I can get that one.
ALB.
Lifetime Group Holdings. I don't think that's it.
Nope.
Alpha Lambda Beta. Albemarle. There's Piedmont Lithium Limited, PLL.
Well, I can at least compare it to the futures market and sort of show what lithium is doing. This is not a true valuation of lithium commodities, but this is kind of close. Um, but what you can see here is that lithium futures are extremely expensive compared to what this stock is doing, and currently with it being this oversold and seeing the divergence on the OBV, this is a huge sign of accumulation. And now we're starting to see the OBV lift again after a big bullish divergence here that was the left shoulder and the head of this inverse head and shoulders pattern we're looking at. So I really feel like this thing is getting ready to start a run now. It is probably going to consolidate for a little while. It needs to establish some support here at $4. But I am in full agreement with Cadude's assessment that lithium futures prices and lithium commodities are going to be in extremely high demand. The EV market is still very strong, and the production of lithium is going to be very necessary for basically all areas. There's also Intel, which expressed that it is getting I believe it's securing the rights to some lithium mines in Oregon. I'm not sure if they're going through a third party to secure that or what the situation is. But I do know that Intel is securing its own source of lithium also. So that's going to be a big deal going into this recession period because the price of lithium is only going to go up. So companies that aren't able to position themselves to get their own source of lithium so that they can extract it themselves are going to be in a seriously bad situation. They're going to be paying a high premium through the nose to get it. I got to check on a message from work really quickly. So apologize for the silence. Okay.
Eric looking like it's wanting to break out.
My clock was up by an hour. Oh well, it took profits. My clock was messed up.
How dare you take profits?
I know, such a dirty thing to do in this market.
I know the church is going to have something to say about that kidnapping habit of yours.
Sir, this is a casino. We just let it ride.
The church done called asking for their 10%.
They want their profits back.
Okay, let's see.
Just wait long enough.
Okay, I'm liking what Mullen is. I'm sorry, Redbox. I'm liking what Redbox is doing right now. Mullen's good too. Mullen makes me happy too. I just have to wait for it to find its bottom. But Redbox, I see this strength in it right now. The RSI is establishing higher lows, which is good. I'm getting pretty excited for Redbox.
If you switch to the 5, did they turn that into a bigger reverse head and shoulders and it filling out the second shoulder?
If I switch to the 5-minute, I'm on the 5-minute.
Okay, yeah, I didn't know if that that first what we were looking at originally as the right shoulder would completely nix that being. Like, imagine that little dip didn't happen, and right where it's at right now is the bottom of the right shoulder. for the inverse head and shoulders.
I see.
So you go from like 1380 down to 1289, back up to 1389, down to 1222, back up to 1390, and then if it stops here at 1260.
Yeah, if I see it bounce off, of the VWAP with a nice big strong green candle, that would be my buy signal. I wouldn't wait for the neckline. Yeah, big strong wick. If this candle closes with a long wick, or if I see a green engulfing candle, then that would be my buy signal. Oh yeah. This thing's getting rejected. Wait for the candle to close. Like I must emphasize that people should wait for candles to close if they're trading like this. Be very careful about rushing into a trade when you're watching the candle wicking like this, especially if you're day trading with stop losses, because that is how you get stopped out of a good trade. Make sure that you wait for candles to close and you set your long positions with good strong stop losses, and make sure you're trading with a very clear risk to reward ratio. This is a technique that I learned from watching the Moving Average, which is a excellent YouTube channel. If people want to learn more about day trading, I strongly recommend it. But for example, if I'm taking a long position in Redbox and I see this candle wicking like this, and I'm looking at an inverse head and shoulders pattern, I want to set myself up with a clear, defined stop loss. So what I do is I set my stop loss just below the wick of the head on the head and shoulders, and I go ahead and set myself up for a 2-to-1 risk to reward ratio on my profit margin. And if you're using TradingView with this, then that helps quite a bit. Now you could go for a stronger risk to reward ratio if you're feeling extra bullish, but probably a better way to do it is to set yourself up for a 2-to-1 risk to reward ratio, close like 60, 70, 80% of your position, and then let the rest ride, and move your stop loss up to the neckline of the head and shoulders, and that way you secure yourself and you guarantee yourself profits no matter what happens. So if this move completes and we see this red candle close here with a long wick, and we get a confirmation green candle that completely eats this red candle, we need to see a big green engulfing candle as confirmation. So keep an eye out for that on your charts if you're looking to trade on these individual signals. Let's see. I see that BRQS is also moving pretty strongly today. Let's go ahead and take a look at that one and catch up on it.
LITM moved pretty big since you looked at it. It's up to 4.5 now.
Yeah, I saw the huge volatile spike that it made here. I actually I like what it's doing. The one thing that I would wait for is to see how long it takes before it actually breaks out above this 200 period moving average on the hour, because this first move is always just like a big volatility spike and then it just comes down immediately. So I hesitate to just rush into the position. Don't do that. I've made that mistake so many times, and I've learned from those mistakes. So now I see this volatility spike. Now it has my attention. Now I'm waiting for confirmation. So what I'm going to use for my confirmation is to see that the stock crosses above this 200 period moving average on the hourly time frame. I like using the hourly because it's a slightly longer time frame.
Are you still looking at Borks?
Yeah, BRQS.
All right, just making sure.
Yeah. So if I see BRQS start to show strength and move above this 200 period moving average and then consolidate, that will be my sign of that will be the sign of strength that I would use to go long on it. I don't know that I'll go long on this one again. The company does have some things going for it. It's in a good space. with them being a hardware manufacturer, but they are subject to supply and demand and supply chain issues. So there's some risk there that I want to be cognizant of. But in on the side of the bulls, I can see that there's been a lot of strength as it came down to this area of consolidation, and it seems to be rejecting this price level below 15 cents. So those are all excellent signs for this particular stock. I mean, it is a penny stock, but so, anything can happen. But those are some signs that you look for confirmation of your trade. Let's catch up with everybody else. Okay. Thanks, Michael Guy, for letting me know. I'm going to go ahead and bump everybody's volume. If it's still too quiet, just shout at me. Yeah, I know that everyone is like super soft. It's just because of my audio settings. It's not anyone else's fault. So you can yell at me.
Who you calling soft? Pretty soft. I'm not gonna lie. I'm a giant teddy bear.
Wishy.
I like warm hugs.
Apparently, that's all that I can get out of it. Oh, you know what I can do? I can switch this to. Nope. Nope, that's the most that I can get out of it. So I guess that's as loud as anyone gets. J-Ruff, open your big mouth so that I can get an audio test.
Hello, beautiful world. How are you today?
All right, perfect. Okay, I think that works.
Sweet.
Now I gotta adjust my volume down a little bit so that I'm a little bit more even. Okay. Everybody should be very pleased with the audio now. OBS keeps resetting my audio settings, and it's kind of frustrating. Oh, I wasn't even paying attention. Joe B, welcome to the Discord and or welcome to the YouTube membership, I should say. Thanks for becoming a denizen. Really appreciate that. One of these days, I'll work on how I'm going to show members appreciation. Maybe I'll have to figure out some way to give people. Maybe what I'll have to do is I'll have to link YouTube membership with Discord somehow. See if that's possible. That way, people can be members of both Discord and YouTube. I don't know if that's something that can be done. I gotta say, it would be much better to be able to just have everybody be who's a member of the Discord also be a member of the YouTube channel.
I would say probably not, just because YouTube won't get its cut.
Google already gets a big enough cut. They can get over it or die mad. No, I know that's not how it works. But I'm still going to complain anyway. Let's go catch up with AERC because everybody's screaming about that one now. Oh yeah, oh yeah! Look at that bull flag! Look at that bull flag! Ooh, buddy! Ooh, buddy! It's not sure. It's not sure, but it wants to. I can feel it.
Redbox looking like it does want to complete that inverse head and shoulders on the 5.
It does look like it. Ah, see, that's what I was looking for. There you go. There's your confirmation candle. Thank you for the call out. There's your confirmation candle. Redbox just closed green above this big red wicking candle. There's your sign. There's your sign. So now, if you're feeling dangerous,
You know me.
you can play Redbox to the upside above $14, maybe $14.90, and you can set a stop loss below the head of the Head and Shoulders. But it is showing some very, very, very nice strength. So there are some possibilities that the trade will work out in your favor. May the odds ever be in your favor. So what's going on, chat? Let me catch up with the Discord chat. MSRP, CRXT, and Biora. Okay, that's a lot of requests, but I'll get to them all. I don't want to take the market off of any of these. Come on, TradingView. I know you can do it. I believe in you. Jeez, so slow. All right, let's look at Biora. CRXT. CRXT is barcoding on a flag. MSPR. That's MSP Recovery Inc. Long consolidation on this one. Wait, this is an IPO? Or what the hell? What happened to this company? It was trading flat for an eternity, and all of a sudden, this thing split, didn't it? It doesn't show a split. Wow. Yeah, I don't know how to read this one. I don't know how to read this one. Let's see. Shares plummet Tuesday in NASDAQ trading debut post-merger. This was a SPAC that went bad. Homie, I'm sorry. I would stay away from this one. I appreciate you bringing it up, Yakov, but I'm going to say MSP Recovery. I would stay away from it. It looks sketchy, and it looks like it was a SPAC play that went tits up. Clarus, I am holding a position in this one, so just be aware of that. I see an inverse Head and Shoulders, but it is barcoding on the 5-minute, so it may not necessarily mean all that much. The one problem that I see here is a bear flag on, or I'm sorry, not a bear flag, but a bearish divergence back to back on the RSI. Let's go back out to the 1 hour and go take a look at what Clarus is doing. So this is a breakdown of a double bottom, so this is not a bullish pattern. I'm not sure if Clarus is going to just go into consolidation or if it will break down, but right now it's not looking its most healthy. It is starting to show some momentum here, though, so it's trying to catch up, but it may need some time. I'm holding shares in Clarus. I'm not trading any options, which is not usually what I do, but I am doing it on purpose because I know that this one could be a long wait. So, just play things safe. If you want to take a position in this stock, I mean, I don't even know if I can recommend it at this point. Their earnings were a big disappointment. They reported a huge loss. And even though it had this big volatility spike, the short interest against it is pretty heavy. So shorts are kind of in control of this one. I'm already in my position. I'm just going to be a bag holder. I'm okay with that because it wasn't a very big position. I can wait. Just know that it could be a while. This company is it's basically a novel hormone therapy company. They're building or they're creating hormone therapy drugs for testosterone replacement. So if you think of like synthetic thyroid medication, they're basically doing the equivalent for synthetic testosterone. So it could be a good space. It is in kind of high demand. Holistic medicine is kind of giving way to hormone therapy. But yeah, as far as the technicals go, this one is not yet showing the strength that it needs to break back up above $1. So this one is probably going to need some time. And then Biora is it's breaking down again, but know that it is creating a flag off of a double bottom. So this is a double bottom. I'll go ahead and put this on the hourly chart so that it can be more easily seen. So you've got these two candles that wick down this one green candle wicked down pretty hard, and then you have another red candle that wicked down into that zone. It crossed into it, but did not stay there. It didn't close in that area. So this is a sign of a bottom and a potential reversal. So this is actually, if you're looking to average down in your position on Biora, this could be a good entry. I'm pretty content with my position, and I sold a lot of puts. I sold a lot of puts on Biora. So unless you're looking to accumulate more shares of this thing,
We're starting to get some volume across the market, folks.
are we really? Oh yeah, I see. SPY is starting to come back a little bit.
The tick just hit 1340. Wow.
That's pretty big.
Okay, right. Then.
So if you were waiting on Redbox for further confirmation, my initial confirmation was this big red wick on the red candle here on the right shoulder of this inverse head and shoulders. You see this inverse head and shoulders. We got a big deep red wick that was rejected off of the VWAP, and then we had this green engulfing candle, which was my first confirmation. Now we have another green candle. We're getting some resistance here at the neckline, but that's okay. As long as you don't see a big red engulfing candle on this, this is a 5-minute time frame, then I would honestly get in on this candle. I am not going to. I'm not going to buy any more Redbox. I am content with my scalp on Redbox.
It appears as though that little red candle you're seeing right there from the 1269 up to the 1353, that 1321 happens to be a 38.2% retracement.
Oh, really? Perfect fib level.
Yay.
Very interesting. Let's see, AeroClean is acting very interesting. LITM is starting to show even more strength. It's starting to break out above all this previous resistance. Let me get a volume range on this one. Oh yeah. Oh yeah. $6. $6 for the big resistance. I'd take that bet. I'd probably start getting I'd probably get antsy at around 550. That would seem to me to be the next big area where you'll see resistance. If the price gets hung up there and it doesn't break out with a clear sign of strength, then it may spend some time just consolidating sideways or even get rejected off of that area. But I'm liking what the OBV is doing. I'm loving what the RSI is doing, and this one is a long hold for me. I'm gonna give Lithium some time for accumulation to take place, and for the crisis of supply to finally settle in. And nobody should feel bad about missing big moves in these squeeze plays. It's not that's FOMO talking, and you should ignore it immediately. Don't think that way, because there's always opportunities, and the point of this is to make money catching those opportunities.
You talking to me?
Yes, I am talking to you.
You know this.
I am talking to you and
story
everybody
behind
who
it.
is thinking like you.
You know the story behind it. I'm not mad at myself for missing out because I missed out. I'm mad at myself for missing out because I made a stupid accidental mistake.
Yeah, I understand. You're under very your shares were lost for a very painful reason. I understand.
Yeah, I'm mad at the mistake. I'm not mad at missing out.
So I'm looking
But
at.
you're right though. There's always another ticker. I mean, there's always the short squeeze. There's always a runner. There's always something. So yeah, I wouldn't feel bad about missing out on the play at all.
Yeah. There's always going to be another one. These opportunities are available both to the upside and to the downside. Let's see. I'm going to take a look at a couple of other ones. So another play that I'm looking at actually is Imperium Petroleum, IMPP. This one is starting to show some serious strength. These repeating big ass bullish engulfing candles. I'm loving these. You can see that this is actually a specific pattern known as a three-line strike. You see these red candles, these three red candles, and then one big green engulfing candle that eats all three of them. That's a three-line strike pattern, very bullish sign of continuation. And you had another one happen right here, and it's coming off of a. I think that this would be right around the 15 or the 12 moving average in this area. Or I'm sorry. This is the 20. The white line is the 20, and this is the 50 period moving average. So this consolidation here with higher lows on the price action are all good signs, and you have these hidden bull signals on the RSI. Now what I want to see is one big bullish divergence on the RSI with the price dropping low and the RSI closing high. And that would be a huge buy signal. The one thing that I am looking at with IMPP is actually a gamma squeeze. There was a huge amount of bullish flow on IMPP. So I want to pull this one up on Ortex and also get IMPP up in unusual whales. Assuming that I will ever be able to type anything again. Come on, man. Oh my god. My computer is dying. So IMPP, the short interest, just exploded out of nowhere. As well, the open interest in calls went really... The open interest in calls is extremely heavy. Man, this options chain is freaking weird. I'm just going to take that away because it's not really telling anything. So, the other half of the story is that IMPP is on the threshold list. Oh my god. I think that my computer is going to explode for some reason. I'm probably going to have to take us off of low latency mode. Oh my god. Everything on my computer is going so slow now.
I'll tell you one thing ain't going slow. That's going to be Eric, Mr. AERC, intraday high.
All right, let me slow things down just a little bit. Oh man. Okay. That feels better. Okay, so IMPP. So we see that it just ended up on the threshold list, which means that at least for the last 5 trading days, the failures to deliver on it have exceeded more than 0.5% of the outstanding shares, which in the case of IMPP is basically the size of its float because it's almost the same. There's very few insider held shares left. So the short interest of the free float is currently sitting at 12.5, and it's been climbing rapidly. Oh, I'm sorry, 14%. The cost to borrow has been rapidly ascending, and the utilization recently got maxed out again. On loan shares are heading towards the stratosphere as well. And the number of loans available. Oh, wrong one. So there's very few loans in total. So this means that it's a high concentration or high density of shares borrowed per loan. So that tells me it's probably a big institution, i.e. market maker. We have a huge spike in security lending volume over the last several weeks. So at the moment, we're watching all this price action happening on IMPP. We're seeing a bunch of calls opening up onto the chain. So somebody is predicting a huge move, and market makers are making moves to provide that liquidity. So somebody probably knows something. This is a huge bet on an otherwise innocuous, like nothing company that's trading that, like it was trading less than $1 just a short while ago. They're not currently at risk of delisting. They haven't been trading below $1 long enough for that, but that is normally what you would expect for a company that's trading below $1 for it to get a NASDAQ delisting warning and for shorts to just pile on and try to annihilate it and smother it in its sleep so that they can get that tax-free money. But for whatever reason, despite all of these shorts, the price is continuously lifting up, and I'm not entirely sure why. There's no news. There's no real major catalyst other than the fact that they bought a boat. They bought 2 tankers specifically. This is a shipping company that ships petroleum and gas products. So that was what caught my attention, was that there's no way that just buying 2 tankers is like the only reason for all of this nonsense. Like look at these calls. Oh, I'm sorry. I need to filter this based on size. Give me just a few seconds to clean this up a little bit.
ARC just passed 1205.
Nice.
I'll take that back. It's at 1215 now. 1218, 1220.
Okay. So on the charts, we have a whole bunch of 50-cent calls that got sold recently, but we've also got a whole bunch of $1 calls that were purchased. And it's blown out the put call ratio on this stock, such to the point that it has it's brought a whole bunch of open interest to the calls in IMPP specifically. And almost all of the flow is pointing at July 15th. So whatever is going on is obviously expecting some big news, or maybe it's just somebody that's trying to cash in on some income by selling a bunch of covered calls and then buying slightly out of the money calls as a hedge. But the price action doesn't quite reflect that, and the open interest from small retail orders shows that there's some interest in the stock, at least from Reddit retailers. So I'll go ahead and head back to the charts. AERC. Ooh, wow! Look at that candle. Yep, broke the neckline on this inverse head and shoulders really quickly. If you are in this play, congratulations. I do not hold a position, but I know quite a few members of the Discord got in on this one pretty early. So thanks again, Chef Pew Pew, for calling this one out.
Yes, sir. It's a moving.
Interesting. Okay, so I see the live stream chat message from Dr. DFace pointing out Hoop Money's tweet saying that GMVD is investigating naked short selling while also authorizing a $1 million share repurchase program. Meanwhile, their stock has seen upwards of 40% short exempt volume over total volume in the past week. Not financial advice, but I think they may be trying to help us out. So that is interesting. I still haven't seen the failures to deliver that were being spoken of. I'll go back to the chart really quickly because it's at least worth looking at. Like I'll be happy to look at any stock. I just need to see some confirmation. Yeah, there's no failures to deliver. I just don't see them. They're not here. I don't think that Ortex is leaving it out.
Sorry, I'm just marveling at Aero Clean getting ready to push 1350.
Yeah, I was able to close my other position with 40%, so I'm good on that.
Nice.
Yes, sir.
Oh boy, that is a strong move. That is a strong move. Well, congratulations to everybody who was holding on to AeroClean Technologies. It's a very nice profit capture. Make sure that you take some stuff off of the table. Don't just hold on to the entire position. Make sure you lock in profits. Always take between 60 to 80% off of the table. Once you're deep in profit, guarantee yourself some gains and reset your stop loss. Make sure that you're not giving up anything, and make sure that you only play those runners with the house's money. Okay, Redbox breaking back down. So inverse head and shoulders is not playing out. I see. Still in low volume right now. Maybe they're going on a stop loss hunt.
$15 and, well, actually 14 minutes and 15 seconds left in the trading day.
Buying everything to knock it out of that wedge, or to break the pattern.
Here's something. So, if you look at the 15-minute on or the 30-minute on the SPY, you see these these 3 green candles and this one big red candle. This is setting up for a 3-line strike pattern. If this candle closes red and eats all 3 of these candles, that's a huge bearish signal going into tomorrow. So if you see this candle is about to close, I would really, really, really be looking forward to the entire market vomiting all over itself going into next week. Let's go ahead and check the flow on the SPY just to make sure that we're not getting left behind.
Box is already back up to where that big knockdown candle was.
The SPY?
No, the Redbox. That big knockdown candle the next 2 candles already ate it.
It's about to jump through a downward channel, so hopefully we're going to break up. Needs to push past 13 and then confirm and hold for a candle or 2, or just move out of there with some heckin' volume.
Mm-hmm. All right. Let's see where all these big trades are at. Lots of put buys and lots of put sells. Overall, the premium is showing that bulls and bears are evenly matched right now. So at the moment, the SPY is looking like it is holding on. All of the bullish premium is set for 380 and 390. So going in the money on those calls. Or they're selling out of the money puts. Yeah, bulls and bears are currently evenly matched right now, which is not surprising given how violent this move was to the downside for the entire market. But just judging based off of the most recent candles, I would say that the market overall is looking very, very unhappy. Going into the last hour of the day, I count 2, 3.5, 4.5, $6 million betting for the SPY to at least hold itself up throughout June, or at least until the June 17th Friday expirations next week, and a lot more of put buys betting against the SPY for September and January. So there's a lot of negative sentiment for the SPY heading into the fall. Yeah, lots and lots and lots of negative sentiment for late July all the way through January. So everybody wave goodbye to the SPY. Say bye-bye, SPY.
Bye-bye, SPY.
Bye-bye, SPY.
Bye-bye, SPY.
Oh, you know what I didn't even look at yet today? I didn't even look at this yet today. Let's look at the inflation numbers. I didn't even look at inflation. They didn't update it yet. They didn't update it on TradingView. Well, I know what the numbers are. It was 8.3 or 8. No, it was 8.6, wasn't it?
thought it was A3.
It is A3. Okay. Okay, so I'm not crazy.
Not because of this.
Right.
All
That
right.
sounds right.
Well, thank you very much for the data update. For anybody who's listening and you're like, what the hell does inflation at 8.3 mean? It basically means that for every dollar you make, 8.3% of it is being taxed just because the Fed printed too much fucking money. Essentially, everything is getting way, way more expensive at a rate of 8.3% year over year. So it's not a good thing for the economy. It's basically weakening the dollar at a rate that is totally, totally murdering the value of our currency. And on top of that, we're going into a crisis where we're going into a debt crisis that is going to rapidly outpace our GDP pretty soon. So if that happens, then, well, basically we'll never be able to pay back the debt. It will ever be growing faster than we can even make money. So that's an inevitable outcome that will lead to the total destruction of the U.S. dollar and the failure of the Federal Reserve. So we don't want that to happen. That would be extremely bad. As much as I laugh over like the market burning right now and the fact that we called this and we warned people so many times that don't listen to the news, don't listen to the banks, and don't listen to Wall Street, they are lying to your face and they're trying to take your money and they are trying to make you hold the bags that they are basically dumping over the edge of the boat. Don't do it. Just don't buy into the bullshit. Outlook for AMC and GameStop. So AMC going into close is still showing just a little bit of weakness, but if you actually look at the candles here, we're showing these repeating green candles. We have an engulfing green candle here on the daily from the 24th to the 25th of May, and we had another green engulfing candle from the 6th to the 7th of June. So these are actually all very bullish signals because AMC has been consolidating and we see that the support is getting stronger, whereas the rejections are getting weaker. So it's getting more and more difficult for market makers and shorts to push the price down. And they have accumulated such a huge short position against AMC that I have no doubt includes synthetic and naked short shares. Ergo, I think that AMC is probably due for its next move. As you can see, I have mapped out a couple of blocks here, these two squares on my chart. And this is my last prediction that I will dare to make on AMC as far as my timeline goes. If it does not happen this time, then I am throwing out my entire timeline theory because all of my confluences will have been broken and it will basically mean that I don't have any clue when the AMC squeeze is coming. So it's not wise to bet on it without just buying shares, just like strict buy and hold strategy, and don't buy stupid calls anymore. That's just the lesson to be learned here, is that the manipulation is too strong and buying calls is a dumb idea. So AMC. There were two instances in the past where there were volatile swings up and then a volatile swing back down here in April, where AMC went from a low of $9.38 up to a high of $12.22 and then back down to that $9 level before it made a huge move to the upside. So I took a look at this and I went and copied this time period, and I saw that it was perfectly matched with in size with Jesus, TradingView, stop it. So if I took these two squares and I laid them side by side, then I would see that the next leg happened right before AMC squeeze was the exact same time frame after this big swing up and a big swing down. So I was like, maybe this has something to do with what we're doing right now, because as you can see from my timeline with like a little bit of really dumb ape math, I basically drew a Fibonacci that laid out the entire timeline of the squeeze so that it is basically three times the length of this entire time period, which is roughly 18 months. So I went and I took the bottom from here, and I took the and I drew the bottom to here. And if I were to take this little square from this time period, again, this is like super tinfoil hat theory, so like no basis for this whatsoever. It's entirely stupid. You shouldn't believe a word that I say because it makes no damn sense. But you can see that these three boxes match up almost perfectly with this entire swing. So I decided, okay, let's draw a box that matches this, and let's copy it and bring it over here. And we see that this entire time frame would match up to about my fib timeline. So I was like, okay, I have one more confluence to work with that kind of tells me that maybe there's more to this than I thought. So if this low, high, low is one box, and it matches up with this low, high, low from back here, then in theory, after bouncing off of this low, we will eventually start to trend upward, and we'll have a huge spike that will swallow up this entire area. So if that is true, and that does happen, then that would put AMC's price somewhere in the neighborhood of between $50 and $60, which sounds like a ridiculous thing to happen in just a couple of weeks, given all of the negative price action that we have seen in AMC lately. It's hard to want to believe that, but I see this coiling here, and I see a double bottom pattern, and I've seen these repeated green bullish candles, like very bullish candles. We've got big green engulfing candles back to back to back here. And yeah, so it's like, I don't know. There's no basis for this. I'm basically just comparing previous price action, and I'm seeing consistent patterns. And if you subscribe to anything like Elliott wave theory or other stock market movement theories, all of those theories basically subscribe to the idea that the stock market creates repeating patterns that, although they look different on scale, if you reduce their scale or expand their scale, they're basically the same moves, just on larger or smaller time frames or larger and smaller price action. So if that is the case, then maybe this is an instance of that. And the only reason why this doesn't look exactly like this move did, where it just bounced immediately and went straight up, is because we're stretching this out over a much longer time period, so it makes sense that it needs to spend a little bit of time consolidating down here. But as I said, like, all of this is just, it really is a tinfoil hat theory, and I have no basis whatsoever to tell you that this is a certainty. I can't. So I'm not going to pretend that I'm not going to pretend that this makes any kind of sense. I'm not saying that anybody should trade based off of this. I'm just kind of playing around with some different ideas. Let's go ahead and watch the market close. And look at that. There we go. Big red engulfing candle. So if you want it, you've got about 48 seconds to go ahead and place a trade against the SPY. I'm expecting big market downturn. There's oh my God, look at this freaking candle. The volume candle and the price on SPY is just so unhealthy. The SPY looks like it's getting murdered right now. Oh my God. Yeah, I'm gonna hang on to my my SPXS calls. That's all I'm gonna say. Wow, what a day in the market. I hope everybody else had fun with this day. Redbox is bouncing again, and ding, 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 that's the bell. All right. So, SPY closed down to $389.82 today. Since it's open, or I should actually do this from yesterday's close. From yesterday's close, the SPY is down almost 3%, 2.83%. Man, that's disgusting. What a day. Well, that's it for the market. It is dead, Jim. We'll review some of the other plays that we have here. A couple of things that I'm looking at but haven't taken a position in just yet. One is City Trends, which is it's basically a clothing line. The short interest in this is somewhere in the neighborhood of 45% of the free float, which is pretty damn high, and it's starting to show some bullish divergence on the RSI. So there's interesting signals being thrown on this one as well. There was some high short exempt volume being thrown by ScourgeBot. It's not quite to the levels that say like squeeze is imminent, but it is kind of getting my attention. So I'm paying attention to this one. I'm adding CTRN to the watch list. IMPP had a huge surge of open interest on calls that kind of threw the options chain out of whack. I'm waiting to see what that does, but I'd be looking for this one to break over $1. If it does do that, then all of those calls would be in the money, and it would actually be approximately, based on the open interest in total, it would be more than 100% of the total free float. So there is some real gamma squeeze potential. It's interesting that all of that volume in open interest for calls just kind of came out of nowhere in the last 3 trading days of this week. So I'm watching for this one, cautiously optimistic. I'm going to wait for some confirmation and see what it moves like going into next week. Maybe something going on with oil shipping will create some new demand for Imperial Petroleum. Hey, Mod Couple, thank you for the $5. I appreciate that. Love your setup. What indicators do you use? Thanks for all you do. Appreciate that. So I use this. I use moving averages and a VWAP for my trend indicators. This is a 21, a 50, and a 200 period moving average, as well as the VWAP, of course. If you want this exact indicator, it's called the Phoenix 1.0. It's actually created for another channel called the Moving Average, run by a guy by the name of Artie, and he is an excellent day trader, and I really loved the indicator that his community came up with, so I decided to use it for my own charts. I also use HTF liquidity because I pay attention to high liquidity pools. There's a concept in the market known as supply and demand trading or liquidity pool hunting. I'm not going to go ahead and explain it here because it's a really long topic. But if you're interested in these lines and what they mean, you should research about liquidity pools, liquidity hunting, or liquidity raid. All of those terms refer to market makers basically just stop loss hunting day traders in areas where there's a large amount of limit and stop orders and pulling all the liquidity out of those prices and sending the price running in the opposite direction. M1 KNRB, I'm sorry if I'm butchering your name. I already covered Biora, so if you want to go ahead and take a look back, just like an hour ago, I went and covered Biora pretty extensively. Right. So another company that I'm looking into for a potential short squeeze. I'm trying not to get into too many short squeeze plays at once. I'm just looking for the ones that are showing like very clear imminent movement strength. But Vuzix is one that I'm adding to my watch list. This is a company that makes smart glasses, smart glasses and augmented reality glasses. I know that that's probably like a very niche thing to be looking at in this current market, but for what it's worth, I think that it's pretty cool, novel technology. And if there does end up being a big demand for augmented reality and entertainment centers and things like that, or if they get some kind of partnership with Microsoft, just some theories of what could happen. those are all possibilities that might increase the valuation of the company. And my reason for looking at it is because it's been recently showing some strength in the price action, and it is already way oversold. So there's some potential here. I'm not taking a position in it yet. I'm just watching it. But currently consolidating pretty strongly between the $7 and the $4 price range. If I can see it start to show a little bit more strength, like if I see a golden cross on the daily, what I'm really looking for is for this 200 period moving average to come back down into here. This might be something that I might play for a recovery going into the end of the year, or maybe purchase shares speculating on a big run during the Christmas season, something like that. So keeping an eye on that. Metamaterials is another one. This is also a big retail squeeze play that I had been involved in the past. Not currently taking a position in it, but it is in consolidation right now. It had a breakdown below its a really strong area of support, and then immediately got rejected from that area and bought up below $1.50. So I'm going to watch this one also. I'm going to see where it closes going into the fall. And if I can see some strength in this one, then maybe I might consider taking a position in this one. But this is also a highly shorted stock, and they make some pretty rare material objects and screens for Samsung. So there's a valuable partnership between them and the semiconductor industry and smartphone manufacturers. Other than those, I have some very, very, very bearish positions against the housing market overall. I'm betting long on DRV, which if you missed that conversation, I'm going to be posting a highlight video a little bit later today. And that will describe basically all of my bearish plays against the housing market. If you're against the housing market, you think it's overvalued, or you think that REITs are going to basically go die in a fire, if you share my sentiment, then DRV is an excellent way to expose yourself to that. But please note that that is a high leveraged ETF. It's extremely risky. You shouldn't trade it if you're not familiar with these. It's much safer and much more. It's a lot more clear what the price is going to do if you just straight up buy puts or short something like the XLRE ETF, which is the SPDR index's real estate index. Okay. Michael Jones. Yes, I did do Biora. You can go ahead and look back at about like 40 minutes to an hour in the past, and I already covered that one. Do we have any other requests for tickers? Feel free to throw them at me. Let me see, live stream, chat. Do I have any other requests? We went over LITM, CRXT, and Biora. Covered those. I see. Okay, well, thank you for the update, Scrap Queen. Apparently, Biora Therapeutics just received a notice of delisting or failure to satisfy listing requirements, which doesn't come as a surprise. They've been trading less than $1 for more than 30 days, so we knew that this was coming. The NASDAQ has listing requirements that if the stock does not trade above $1 for more than 30 consecutive days, then they will receive a warning of delisting. It does not mean that the stock is just going to disappear overnight. They have the chance to appeal it. They will have an opportunity to go and look over some ways that they can recover their stock price, and as long as they can get it above $1 for more than 10 business days, then they are back within compliance and they are off their delisting warning. So that's all that needs to happen for Biora to get its delisting warning removed. Jake from State Farm wants to know about BBIG. I'll take a look at it. So BBIG, last I saw it, was starting to show continuous consolidation. I was drawing some Elliott waves that ended up not playing out at all. So that was a wash. BBIG is once again setting itself on this low here. At $2. So BBIG really, really likes to bounce off of this $2 support. It's done it multiple times. So if you like BBIG for a squeeze or for a long hold, I'm no longer in my position. I decided to close my trade once I saw that BBIG was in profit and I saw bearish momentum coming in on the options chain. I saw a bunch of puts coming out against it. Somebody already knew. And of course, within the next 2 trading days, it gapped down hard. And I'm sorry to everybody. I know that that really, really sucks. But hopefully if you were able to catch the warning, that you were able to do something to hedge your positions, buying puts or selling calls. But as I was saying, the big moves off of BBIG have consistently happened after it bounces off of the $2 level. So we have touched this level 1, 2, 3 times in the last, in just this year, and now we are touching it again. So this is the potential to be, this does have the potential to set up similar to a Wyckoff. Wyckoff, God, what's the Wyckoff accumulation pattern. Just the theory that institutions are pulling the price down and bringing it down to a level which they are accepting buys at. So it is possible that this is just them pulling it down for one more accumulation before they let the price rip. But we don't know. This is all market theory, and it's all kind of happening behind the scenes. And of course, we know that BBIG's management staff have been honestly pretty freaking irresponsible when it comes to watching out for their retail investors. My biggest issue with BBIG is that their executive staff have repeatedly pulled the rug out from under us like 6 times now, saying that they're going to do something that's going to be good for the company, and then they delay at the last fucking minute. And it doesn't do anything except hurt investor faith in the stock. And I know that they're doing this on purpose because all of the assholes that are inside on these trades are able to short the company, and they know that these announcements are going to be made. So of course they have access to this information. I'm just waiting for the SEC to fucking do something about it. Like, just go after these guys. Like, go after the insiders that are trading based off of this information and then telling BBIG's staff to delay, knowing that it's going to hurt the stock and it's going to wash retail traders out of their trades. I have very little doubt that the whole purpose for this is because retail investors hold the largest majority in stock for BBIG, and it is possible that retail could actually vote no on the shareholder votes enough to actually overwhelm the yay votes by insiders, the board of directors, and the institutions who are long on the stock. But I won't speculate too much more on that. Day night, I don't know that it will run up, but BBIG is at its bottom, which it has bounced off of repeatedly in the past. So yeah, it's possible. I just want to caution people because it's they've lied to retail investors so many times. I've decided to just stay out of BBIG. I now am in a point where I'm just so frustrated with their staff, and I know that this is exactly what their institutional investors want to happen, is for people to just like say fuck this company and stay out of it, so that they can make money off of it. But I'm not in a position where I'm willing to lose money on trading on this stock, where I know that the executives are just playing into the hands of their institutional investors and helping them to fuck over retail. So if that's the game that's going to be played, then I would just rather stay out of it. I'll look for an opportunity where I see BBIG has the potential to run and then really hammer shorts, but until then, I'm just going to stay away.
You see 100% gain in one day on BBIG. That would be the time that I'd be looking to start playing around on it again. But to your point, they want retail out of this play. They want to use the market as a source for liquidity for the company. That's what they always wanted it to do. It's the type of company that they are. They need funds in order to keep funding their projects and where they want to go. And the way they get that is through institutional investors, not retail.
Yeah, exactly. So the fact that retail is just buying and holding the stock and not allowing them to manipulate its price through the help of their institutional investors is actually hurting them. So the involvement of retail by nature of itself is against the company's entire business model. So the fact that they have so many retail investors is detrimental to them as far as they see it, which I think is fucking stupid, because if they actually helped out their retail investors and were more interested in protecting their investors, they would see the share prices that they need to see in order to provide themselves with that liquidity, because they would be able to over and over again just continuously dilute the stock as they need, and then conduct a split or a reverse split or whatever, do this process over and over again, as long as they were actually protecting their investors and not pulling the rug out from underneath them in order to purposefully fuck them over. If they actually took the side of their retail investors and were more interested in protecting investor wealth, which is the fiduciary duty of any company which is publicly traded, by the way. So if they are, and I cannot prove this, but if they are purposely fucking over retail investors, then BBIG is in violation of their fiduciary duty, and they should face fines.
They can look at it in multiple ways to try and figure this out. So like the fiduciary responsibility is towards their shareholders. Now there's an argument to be made that having retail in the play and the price spiking and then being bottomed out because people get out of it afterwards, that could be detrimental to the company in whole, because they can't get institutional investors to invest whenever the price is so sporadic and going all over the place. So they want retail out so that they can get institutional investors in more, to be able to get more funds, dilute, do all that kind of stuff. So like they have a logic process that they could use to say that it's not their fiduciary responsibility for just retail investors. It could be an overall, and I'm saying it's bullshit, but you can look at it this way. You know what I mean?
Yeah, I can totally agree with your what you're saying. There is a case to be made that they are more beholden to the number of their shareholders that have the most shares, rather than retail investors. But I say that's dangerously close to insider trading. And in fact, I would go as far as to say that it is insider trading, because I suspect that they're letting their big shareholders know what company actions are going to be taken. And I think that they are collaborating with them in order to cause the share price to get hurt so that they can purchase more shares while they're cheap. And in the meanwhile, steal those shares from retail investors who have no way of knowing this information. So I would argue that the entire business model of BBIG is fraudulent. But who am I to say? Because I don't make up the fucking rules.
Yeah, I'm on board with you.
I'm going to go ahead and cover a few more of the tickers that people were asking about. So I see iSun. I see that it's pretty badly oversold. It's been in a channel for a long time, and we do see that there is some divergence on the OBV. Let me get the there we go. We'll get the daily out here. So OBV has been in a plateau for a while. They have a negative earnings report. They have been losing on their earnings pretty consistently, so they're not profitable. They were profitable back here in March, which is March of last year, I should say, which is interesting. And there has been a huge move signaled by the RSI and this bullish divergence here. I would also say that there's another bullish divergence. Oh, I see. No, there is no bullish divergence here. It did close lower. I would wait on this one. This one probably has to go through some consolidation for a little bit. I'll double check the Ortex data just really quickly, just to make sure that there's not some other major catalyst, such as shorts being heavily underwater. Okay, I see nothing, so I'm just going to say no. Yeah, I would wait on this one. Not something that I would jump into. It looks very thinly traded, and not a lot of news. So, yeah, I'm just gonna say wait on it or don't trade it, because I'm not gonna. Not financial advice, obviously. You get to do whatever you want to do with your money, but I don't like it. I don't think it's something to jump into at the moment. Somebody's feel free to disagree with me and provide a thesis as to why. But for right now, I'm just going to say no. Reliance Global Group Incorporated. Oh yeah, I looked at this one quite a while ago. Back when it was making big squeeze moves. That is interesting. All right, so bullish divergence here on a double bottom pattern. And the RSI is just taken off. It's up 80 cents from its lows. Okay, it did complete a double bottom pattern. This is a double bottom. Barely, but it is. Because this wick sets the bottom down here at $1.02, and this candle closed above that wick. So this is continuation from that double bottom pattern. I would expect it to consolidate or retrace here. So if you're looking for a fib retracement, you draw it from the bottom here to the top here, and then stretch it out a bit so you get some more time. And we see that it got rejected off of 286. So your first level is right here at 266. I would expect it to retrace at least back to the 382 level. So that is that price would be $2.54. So I would say wait for consolidation and wait for it to flag out. Give it a little bit of time. And if you can see some continuation and some strength and volume coming into it, then that would be the time to go long. But for the moment, I would hesitate just because, is this a company in... What do these guys do? What do these guys do? For some reason, I want to say that they're like an insurance company or something. Yeah, they are in the business of insurance market and other relative sectors, focusing on acquisition strategy, wholesale, and retail insurance agencies. Okay. Interestingly enough, I recall seeing news that a bunch of different companies were targeting insurance companies. Specifically, Berkshire Hathaway acquired, what was that company called? Berkshire Hathaway acquired somebody. I need to go and pull up the news on it. But there's some speculation by Berkshire Hathaway that there's something going on in the insurance industry. Let's pull up BRK.A. I just want to look at their news headlines. Allegheny, that's it. So Berkshire Hathaway is acquiring Allegheny, which is a business insurance company, just like Rely is, and they did it for $848 per share. So the acquisition it was a huge acquisition by Berkshire Hathaway, and I find it interesting that while Warren Buffett is pulling out of the banking sector, like he evaporated all of his holdings in Wells Fargo, which is, by the way, now down today massively. Wells Fargo took an absolute shit today. And I kind of had a feeling that it would, but I didn't want to take a short position in it just because I felt like it already had a huge move, and I felt like the risk to reward ratio was not quite in my favor. But yeah, Wells Fargo is down. Wells Fargo's down 6%. So yeah, Wells Fargo dumped hard. So Rich Uncle Warren Pennybags he's one of those institutional investors that I really do pay attention to, because that dude is smart and he plays the long game. He knows how to play the long game. He's been in the market for a long time, and I think there will be any investor like him will be few and far between when he finally leaves this plane of existence. But the fact that he specifically got a massive acquisition in a business insurance company and business insurance sectors does tell me something interesting, and I suspect that it has to do with the housing market and a significant number of real estate companies losing their asses right now. So you got Zillow, Redfin, you've got several construction companies, including D.H. Horton, Lennar, and Pulte Group. All of these companies that are involved in REITs are getting they are all their money is being run away with right now, and I feel like there's a connection here. So this could be a good sector to get into. I would just say be careful, because this company is not profitable. You can see that financially they're reporting negative earnings. They have quite a few losses, and they haven't posted anything particularly bullish for some time. They do have an analyst buy rating. They are rating them at a $7 price target, so that's worth paying attention to. And the moving averages are crossing over. So all of these, good signs. All of these are good signs. So I suspect it will consolidate. Doesn't mean I'm right, but I suspect that it will consolidate below $3. And I would be looking for that cross. I would be looking for that cross above $3. There's probably going to be some pretty stiff resistance there. So I'm going to hang on to this one, actually, and I'll add this one to my watch list, because it does feel like a bottom. There's very little volume traded here. Tons of volume here at the top, which is interesting. So I would consider this. I would consider this a buy. I just don't know if I would buy it right now. There is some strength though, so I can definitely see your case for it. So I'll go ahead and add this one to the watch list. Thank you very much. DTC has a hyper low float volume and float with high short interest. Check it out, guys. It will be a multi-bagger. Let's see. Thanks, Jigo Habibi. Thank you for bringing that one up. I've seen a couple of people talking about solo brands. and I do see some strength in its recent moves. It had this 3-line strike on the daily, which is that's actually a pretty significant pattern to see on a daily time frame. And we see that it's made these same patterns repeatedly. So we had one big green here swallowing up red candles, one here, another one here, and another one here. So now with these repeated bullish divergences and the stock finding support here, I will still say wait on it because this is the same exact move that it did before. It had this big bounce and then it came straight back down, and then a big bounce and straight back down, and then little bounce straight back down, and it just keeps getting lower and lower and lower. So I'd say wait on it, be patient, wait for it to trade outside of this channel. It's not there yet. And there is no time frame. There's not a long enough time frame since its IPO from the 200 moving for there to be a 200 moving average. So your next best bet would be 100 moving average. Yeah, okay. I can definitely see a good case for this to be the bottom. I would say let it consolidate, give it some time. But if it breaks $5, then if it breaks $5 and sets up a new trend, then I might take that bet. On the hourly, the trends are crossing, so you're seeing the 20 crossing above the 50, and that is bullish. I would want to see the 50 cross the 200 period moving average on the hour chart for me to get my confirmation. And I think it'll probably have to cross above $6 for that to happen. So that might be too late for the trade, but right now I feel like it's too early. It might retrace further. So give it a little bit of time. That's just my 2 cents. Tesla spiked after hours. That's cool. I don't know what's up with Tesla. It spiked by $10. That's good. That's a 1% move. Let's see. Supercharger test of Tesla's new 4680 battery in an A Model Y shows fast charging speeds. Awesome. Wow. Of 9% to a 50% charge in 12 minutes. That's pretty ridiculous.
CNBC released something about a Tesla filing for a 3-for-1 stock split.
Okay. I'm big on Tesla. I sold Tesla a long time ago, back in 2019 or no 2020. It was shortly after the GameStop squeeze. I sold my Tesla shares, and I don't say that I regret it because that money let me capture the AMC squeeze to $70. But I definitely want to get back into Tesla because this company is the future. I really do believe that. That is some excellent news. I'm hoping that Tesla gets dragged down with the market though, because selfishly I want more shares. I selfishly want Tesla to die just a little bit. I just want it to get sick, just so that I can acquire like a few hundred shares. I really want Tesla like at $300 and just take all my retirement money and put it in Tesla. Somebody said something about the SPY pumping.
It's not. It's the late settlement.
Oh, I gotcha.
Those candle wicks, if the people that are talking about it, those candle wicks, those massive wicks that you see at the end of the days, they look to be, and I don't know this for sure, but they look to be late trade settlement. If you look at them, they usually pair off to like highs or lows or something like that of the last day or two.
I'm just making sure to document all of the areas where Zeus struck down the SPY, and as a warning against anyone who would dare to vote in its favor.
I like the meme charting. I like it.
Iron Man. I covered BBIG already. I do think that it could be at a bottom, but I'm very jaded by the company, so I'm not trading it. Advice on getting out of a stock that's dropped? I mean, once it's dropped, it's dropped. So I don't know what you want to do about that. If you're so okay. I mean, honestly, if you think that the company is done, and I'm not saying that it is, but if you don't think that BBIG is going anywhere, or you want to make money off of your shares, then what you should be doing is selling covered calls and possibly selling puts. It's up to you. But if you have cash to use for selling cash covered puts or cash secured puts, then that's a way to make income. You can sell deep out of the money puts at like $1 or $1.50. And right now, BBIG is at a really good level of support that it's very unlikely for you to get a sign. But even if you did, the worst that happens is you buy more shares at $1.50. And on the other side of that trade, on a weekly basis, you should be selling covered calls in order to make income from the lack of price action. So if BBIG is trading sideways and you sell covered calls at like $3-4 and you're constantly making a little bit of income off of that, you can continuously make some money in order to recoup some of your losses from the stock going down hard like it has. And that's what I did with AMC and Senseonics, for example. And it's kept me going. It kind of works a bit like a dividend if you want to think of it that way. It's just a way to make income off of a stock. Just by selling those options. So that's one thing that you can do.
And if you take that money that you're earning off of the options plays that you're doing in order to get the premium, you can take that to be able to average down your actual position to be able to get down low enough to be able to eventually get out green. But it would take a while depending on your position size.
Yeah, that is true. It would take a while. So the main idea of those kinds of strategies is that's an income strategy where you ideally want to buy low, sell high, but in the meanwhile you're using those options selling strategies in order to generate income. Something that you could look into is the wheel strategy, that's an excellent strategy for selling options on a rotating basis. I strongly recommend keeping a trading journal when you're doing that, because it is a little bit complicated, but it is worth it if you're trying to make the market work for you and make consistent, safe income, as opposed to constantly having to fight and battle betting on long bets with either long puts or long calls. You're more likely to profit by looking at slow-moving, non-volatile stocks and selling options and collecting income with premium.
Could you imagine doing that with Tesla? If you had enough shares of Tesla to be able to be selling and to be able to buy and sell the different call options and the different put options to be able to just have a steady income?
Oh my God, stop. You're making my mouth water.
Like that'd be amazing. Like that's the goal. You basically don't have to worry about trading anymore, and you're just selling options and letting other people pay you.
Well, see, that's exactly what I want to do with something like Senseonics. Like if I had Senseonics go to like $100 or $150, then I'd be so good. You know, I have thousands of shares in Senseonics. I think that the company is fundamentally an excellent company. The only problem is that you've got companies like Eli Lilly and Novo Nordisk that don't want to see them come to the light, because it would threaten their entire business model of basically gouging anyone with diabetes. And it's frustrating to me. But say that happened, like you buy a company, that's why you buy a growth company. You buy a growth company with the intention to hold it until eventually it is trading at a higher stock price, and you just sell covered calls with your shares nonstop. And that income, you can live off of that consistently. And if you get assigned, that's fine. Turn around and sell a put. Turn around and sell a put and then get your shares back and make that premium consistently with the wheel strategy. It's just that if you're doing it if you're doing that strategy with a blue chip company, there's a big upfront cost. Whereas with a growth company, there's a big time cost where you have to be very patient. So it's all a matter of what you want to do and what kind of liquidity you're working with, but those are all valid strategies to look into. If you're interested, for those watching, if you're interested in the wheel strategy, the channel In the Money has an excellent video describing how to create your own wheel strategy and how to decide on what kinds of stocks to pick for that kind of a strategy. Paolo Frioni, I covered BRQS at the beginning of this video. If you want to go back like way to the beginning, we covered that one a little while, like 2 hours ago now. Let's see, Biora, we already covered that one. That's about an hour back. Hey, Ozzy. So, all right. So I want to be careful here because you're in a situation that I can really sympathize with, but I want to emphasize that when you're in this situation, it's best to stop trading. Stop trading and switch to paper trading because I guarantee that what is happening to you right now is because you're down all this money, you're in this mindset of revenge trading. And I know that because I've been there. And it ended up just costing me more in the long run. Right now is not the time to be betting on YOLOs. The market is very red and it's a dangerous environment to be trading in. And you have to be really careful with how you choose your plays. And if you're going to bet against the market, you need to really know what you're doing. So my strictly non-financial advice to you is to work with a paper trading account and learn how to trade with the trend. I would strongly recommend looking at a channel called The Moving Average, which is run by a guy by the name of Artie. He mainly trades Forex, but his principles and technical analysis is very good. I learned a lot from him, and I strongly recommend it just on the basis that he has a lot to teach. He has a channel that is strictly dedicated to teaching people how to day trade and how to trade purely based off of chart patterns and technical trends, and that's a good place to start. Dennis Triple D, thank you very much for the $2. Sure, I can take a look at ATER. Yeah, Ozzy, if you are able to send me a message on send me a message if you're in the Discord. I'd love to give you if you're not in the Discord, rather, I'd love to give you a free gift just to be in there and get some advice from some of the other professional traders in the Hell's trading floor. I'm not going to encourage you to trade with money given that you're down right now, but I will be happy to encourage you to join us, and I'll give you a free trial to stay in the community in order to get some support and some help from some other professional traders. Let's see. Right, ATER. So, Dennis, I'll go ahead and get to your last pick, and then I think I'm going to have to close things out here. Diraj, yes, I am still long in Excella. I'll take a look at it in a minute. So ATER, continuously getting these volatility spikes. The big volume at the top tells me that retail keeps getting washed out of its trades. That OBV, though, that OBV plateauing the way that it is really encouraging. So with ATER, I'm going to be paying close attention to the FINRA short exempt data and looking for market maker over leveraging or signs of it. The one thing that I want to caution people of is don't expect moves like this. This was a rare instance that I don't think that people should be banking on for like another massive squeeze in ATER just purely on speculation. This was at a time where it was a micro float. They've since diluted, and the likelihood of a move like this from 6 to 48 is very unlikely. So we need to be very careful about choosing our entries and when to get into the trade. I am already out of my ATER position. I closed my calls at a loss, and I am waiting for more signs of momentum. Right now, we have to acknowledge that they are not profitable. Their financial situation is pretty bad. The market is betting against them, and although analysts are rating them a buy, it's as far as the technicals and the overall financial situation of the company, it's not great. So I do think that it could squeeze, but we need to see some catalysts. So it's not wise to jump into any kind of options plays. If you want to buy this price because you think it's a good price and it's found a bottom, you do you. That's entirely up to you. I will, however, go take a look at the Ortex data and review some of what's been going on with the short interest because I'm pretty sure it's still stupidly high. Yep, 32%. So shorts jumped headfirst into their positions at a low of $2.39. So that tells you something. They've still been accumulating a position. They're still in it, and they are not currently in profit. So all of these shorts that jumped in headfirst into these in at these prices are not in the green. They are still red. Okay, that's interesting. So the put call ratio just exploded up to 0.25. So that's actually telling you that there are more puts on ATER right now. So somebody bought a massive ton of puts and caused the put call ratio to just fly all over the place. I think I want to go and get the live options chain from ScourgeBot on this one. So I'm going to pull that up. Okay, I see the lending volume is still spiking extremely high. It is no longer on the threshold list. Failures to deliver were very ridiculous. I want to see what the on loan shares are doing. Okay, on loan is going back up again. Shares on loan going back up again. And this is the current situation with the options interest. So I think that $5 is pretty out of reach right now. I'm pretty sure that market makers are just borrowing shares on loan as a delta hedge to make sure that they're able to deliver on these, but are very unlikely to need to. They're holding the price down. They kind of have their boot on its neck right now. So ATER is not in a great position for a gamma squeeze. And if you want to look at the current open interest on puts, there was a huge sum of puts that were purchased on it, and now those have expired in the money. So whoever got those obviously knew what was going to happen. It's probably going to be a bit of a wait for ATER. There's still not quite enough strength to make the move. It would take retail buying shares consistently and holding them. It is worth it for retail to keep their eyes on this stock, but going long in this environment right now with the market currently tanking is dangerous, and growth stocks like this are in danger of being acquired or just simply drowning from lack of availability of long-term debt. So it's something that we all have to be aware of. I want to take one last look at what their long-term debt is. Let's see their balance sheet. Okay. Well, their assets do outweigh their liabilities. So that is very good. So in total, their net debt is $2 million, which is that's still okay. And their book value per share is quite high. So book value says that ATER is easily worth $4, and their assets strongly outweigh their liabilities. So as far as their financial status, they're in a better place than they were before, and their cash on hand from financing has enabled them a great deal of it's afforded them a great deal of liquidity. So I don't think that ATER is in any danger of default. They seem to be in a stronger position than they were in the beginning of the year. So I would say that it's worth it to at least consider going long in this stock with shares. I'd say stay away from the options, or if you're going to do anything, sell puts. If you want to go long on this stock and acquire shares cheaply, selling puts is probably the way to go. Because at least by selling puts, you're making some income, and all you're doing is you're just agreeing to be assigned and purchasing shares at a price that you think is good.
Yeah.
So if you're willing to buy shares at $2.50 for ATER, sell it to 50 strike put, and just do that until you've made enough money and shares to be content with your position. That's one way you could do that.
Hey, TD, take a look at the chart that I threw you for ADR in the live stream chat. It's just an interesting chart, like an interesting fan pattern in the log scale.
Yeah, that is interesting. I see what I see what you're pointing out. So on a logarithmic scale, I'll go ahead and just repeat for everybody else who's watching. We'll go ahead and pull out let's try a fib speed fan, actually. Nope, that doesn't quite line up. Okay, we'll try a GAN fan. That seems more like it. On a logarithmic scale. I've never done this kind of charting before, so I'm not going to pretend to know what I'm doing. But I see it following this channel or this trend before it makes a bounce, and then it falls back down into it and then breaks above again. And there's nowhere for it to go at this point. It's hit the lowest point that it can. So unless ADR is going down to like a penny, it won't ever touch this line again. On a log scale, I could see it touching like 120. That seems possible. But, well, anyway, I haven't done charting with log scale or GAN fans, really. I don't normally use those. But it was interesting to look at. Thanks, Logical.
Yep.
As far as what I see in the technicals, I see it trading in a channel. I see $2.10 as support, and I see $4 as resistance. So if ADR is going to make a move, then it's probably going to be on the completion of what I suspect is a double bottom forming here. This is more like a symmetrical triangle structure. So if ADER decides that it's going to make a move, then it will likely come on the breakout here at $3, and maybe it'll make a charge for 4. But that's a pretty small move. Not the kind of trade that I would go for. So I'm going to be patient, and I'm going to wait to see if there's some more signs of bullish momentum. If I see anything on, like, if I see a major RSI divergence, or if I see huge volume coming into the stock, or maybe their earnings report will be insanely optimistic, all of those are good possibilities for the stock to have a change of momentum. So I'll wait for something like that. Excella. Yeah, this one was, I took a bet on this one around the 30 cent or so, 30, 25 cents, something like that. I got some calls for December, if you recall correctly, and I set those at a strike price of $1, kind of like a YOLO bet. Those were only worth like 8 cents at a time. I think they're currently trading at 3 cents. But yeah, Excella is making some repeating announcements of new partnerships with XBP that will amount to they're basically going to take payment processing for several partners. I do see some potential for Excella, especially given that they're such a highly shorted company, and their business model is very similar to the I can't remember the name of the business, or the guy from Seattle, Dan Price. That's what his name is. I forget his company's name, but Excella is essentially a payment processor company, just like Dan Price's company, and they have a similar business model that I think is, it's very good in the financial market. They're, big into electronic monetary transactions. So I see I see possibilities for them. So I decided, what the hell, I'll take a long bet for some really cheap calls. Why not? At the moment, they're currently way down, though, so there's somewhat of a risk of delisting. They've been trading below $1 for, like, man, trading view. Can I have my, fine, be that way. It's been half a year now, so they are at a risk of delisting. So you got to be careful here. They're going to have to make a decision to either do a reverse split or do something to get their share price up. The one thing that I will say that is highly encouraging about them is that they've got 2 back-to-back bullish divergences. So if we've seen, as we've seen in the past, these moves, these big parabolic moves to the upside for these penny stocks, typically come after a series of 3 bullish divergences on the RSI, and it typically follows it hitting its lowest point in its price. So heavy shorting. There is a possibility that we see some upside here, but there likely needs to be a bigger catalyst than just their partnership with XBP. Quick review of their short situation. Currently at 11%, with short interest growing at a rapid pace. Utilization is not quite maxed out, but it is toying with it. Failures to deliver are not exactly spiking to the ridiculous levels that they were at the end of last year, but they are still noteworthy. Has not been on the threshold list at any point in the last year. Security lending volume is ramping up, however, so something is going on, but it may just be shorts trying to pile in on it with seller boxing, which is a topic we've discussed many times on this channel, talking about stocks that get pummeled because they're below the dollar threshold for the NASDAQ listing requirements. That makes this stock a very easy target for shorts to try and pummel it to death. So it's important to know the risks are very real, but it is also there is also potential upside to this. It's just a matter of what are you willing to risk, and is retail in general interested in targeting a stock like this? Right now, short interest isn't quite high enough that a short squeeze, I feel, would be in the works. It's more of a fundamental situation of, can the company get profitable and reduce their debt to equity ratio in the right direction. Okay. All right. Yeah, that's right. Quadruple witching is next Friday. So expect some big volatility. Whatever happens next Friday, expect it to be full of bullshit. Just make sure everybody's being very careful. There's been a lot of misinformation floating around in the market, and news has been unusually optimistic up until now. And all of a sudden, CPI numbers come out. Fed report is about to hit in a couple of weeks, and the housing numbers are showing that basically everything real estate is way overvalued. So please be careful going forward in this market. It's not a bull market anymore. It's not like it was before. So I'm hoping that everybody is able to protect themselves as we continue on into this hyperinflationary environment. All right. GMVD I've already covered, and RDBX I'm glad to hear that it's moving, but I think that that's going to be all that we have time for today. Really appreciate everybody's time. Thank you so much for tuning into the stream.
Thanks, Stevie.
Yeah, of course. I can feel my brain is slowly leaking out of my head as I speak now, so I'm going to go ahead and close the stream before it goes away completely. But thank you guys once again for tuning into this stream. I really appreciate your time. Appreciate you taking the time to learn and gain experience with us throughout this volatile market period. And I hope you all have a hell of a weekend.